and we're going to get into kind of the specifics on what you did to grow your portfolio from, it was about 5,000 to close to 300,000, right?
It was $575.
Whoa.
Yeah.
That's crazy.
Warren Buffett knows what he's talking about.
Don't you mean Warren Buffett?
We have Jason Stephenson on the podcast today. Jason, I actually came across your stuff relatively recently on another YouTuber, Logan's channel. And when I watched through that, I was just kind of amazed at the progress you were able to make this past year. And we're going to get into kind of the specifics on what you did to grow your portfolio from, it was about 5,000 to close to 300,000, right?
It was $575.
Whoa.
Yeah.
That's crazy. That's a lot lower than, and that to the outsider, that might not seem like a big difference, like $5,000, 500, but in terms of trading a portfolio, that's a pretty hefty leap. Just to even go to from 500 to 5,000, let alone 280K. Is that what it came out to be roughly?
Yeah, I think it's, somewhere 280. Yeah, I think it's 280ish right now.
But yeah, so absolutely insane profits, and we're gonna talk about that specifically. But kind of before we get into that, I know you've recently started a YouTube channel, which has been awesome. And for those that don't follow you there or kind of aren't familiar with your story, just kind of give them a background of who you are and kind of what led you up to the year you had last year.
Sure. Well, in the past just years, I've invested in just stock, just equities, and then, so it was really the news that we had the whole virus thing happening in Wuhan, and it was still when it was over there, and I didn't know options at that point, but I knew there was some way to make money when the market goes down, and I thought that was a possibility, and so I spent all my extra time just studying like how does that work. I couldn't tell you what a put was at the time.
This is about a year ago, right? Pretty much.
Yeah, this is basically a year ago. I couldn't tell you what a call or put was, and then so I just started reading everything I could. I got way too technical stuff from like Tasty Trader, Tasty Worked, whatever their actual podcast is. So that was way too much for me to digest just because the language was too much. But just worked through it. And then as soon as it landed over here, I was like, yeah, this is probably going to be a bad thing. And then so that first really, that like 500 to 50,000 was a lot of just naked puts on. I mean, you could have bought it on anything at that point, right?
Yeah.
And kind of get money pretty quickly. So there was, UVXY, TLT, SPY, travel companies, etc. So that's what led to my original spike.
Gotcha. And then I think you talked about it a little bit already, but what was your main vehicle for actually learning the ropes? Because options is like an entirely different language to somebody who isn't familiar with it.
Yeah, good question. So I don't think there was a main vehicle for me. I'm okay with losing money to educate myself. I feel like we pay for education, whether it's college or, courses or whatnot. And so a lot of it was like really trial by fire. Like, I'm going to purchase this. And I definitely didn't have an understanding of like, how far does the underlying have to go by when in order for me to be profitable. I couldn't tell you what volatility was. So it was like a myriad of things. It was putting a lot of different information together. But I watched several YouTube channels, several videos, just a lot of reading. So not one source. And I still don't think there is like one source for me that has been like go-to. Like, I don't follow anybody else's trades. It's more like I took all the different tools available. I found out what worked for me and what I settled into and what's comfortable for me. And that's what I trade. So there's still, I watch people for fun. Wall Street Bets is fun to watch. It's not so fun to be a part of 90% of the time. Maybe it's fun to be part of 10% of the time.
Yeah.
But yeah.
Well, let's talk about the first few trades that you made. I'd be interested to hear about, if you remember, what was going on in the market. Like, was this pre-dump where we kind of on the edge of when we started going downhill? And then, because it sounds like it was early in your options trading kind of career, I guess you could call it. So, what was your time horizon like? Like, what were you doing there where you were able to kind of get those initial returns?
So I didn't know what I was doing. Um, and yeah, I think at the time I can't remember what I was listening to just about, the stocks that should be affected. But I essentially, like, once I understood what a put was, I spent a little bit of money. Like one of my biggest gains, I think, was on TLT, and it was like $75 or something into, I think it ended up being like 20 some thousand. It was something like, it was something just like ridiculously stupid.
Like once in a lifetime stuff.
Yeah. And then same thing with SPY. I don't remember most of the trades, like Carnival Cruise Line and Expedia, Boeing. And then for those first few trades, since everything was sliding down, it was just like you couldn't lose. I mean, good and bad, right? Good.
Yeah.
Good. I made a ton of money. I got to show my friends, hey, look, I woke up this morning, look at my account. It's up 20 grand and just overnight. But bad in the fact, like when you go to the casino and you win the first time and you feel really good, like, I'm a genius at this point.
Yeah.
Then I definitely paid for some of that. Going forward a little bit, I lost back probably a third of my gains, which led me to like, hey, I need to think about this. I need to have a strategy. I can't YOLO everything because we know that ends up.
Yeah. Quick side story. It's funny you said that, because I think the first time I went to a casino, I was in New Orleans, and I was there on my birthday, and we're sitting at the roulette table. And my buddy's like, oh, it's your birthday. And I was born on the 13th. So we threw all our chips down on 13. Everyone else at the table we didn't know was like, all right, whatever, we'll do it as well. That spin, it hit 13. And we all like made like literally big bucks. I was walking around, I was like, this is so easy. Like, how does anyone screw this up? I think I left the weekend like down $500 after making it huge the first day. So
right.
Real world comparison to kind of what you're talking about there.
100%. And that's where like out of the money calls are. I mean, I guess with those, at least the market's fair, but yeah, the odds that you're going to hit them are relative to your risk for sure.
Absolutely. So did you notice after that initial success, did you try and do the same thing and then notice some, trades that didn't go your way pretty quickly after that?
Oh, a ton. Yeah. So I did not have a good fundamental understanding of much at that point. Like, like I'm thinking the SPY could just drop forever. Right. And to be fair, at that point, I don't think any of us knew what was going to happen. Like, I was still scared to go to the grocery store, right? And I'm having gloves and looking like the surgical team walking in there and then getting everything home and you're wiping it down and is it safe to touch? Like at that point, it's just super scary. But yeah, afterwards, my trades that did not go so well, like I kept buying puts and I didn't understand what I was doing, honestly. Like, just because everything else I bought, it didn't matter what the strike price, it didn't matter what the date was. They were all just, it's 10x and 100x and everything. And then so I didn't foresee the bottom at all. And then I transitioned into just almost literally like monkey with the dart, buying random stuff. It felt like no method. And then just like I was saying earlier, I gave back a lot. I traded sideways for pretty much months because, I mean, even those random plays, you're going to win every once in a while. So that kept everything afloat. And I was like, no, I want to do something consistently and then grow. And then that's what you kind of see. It took me a few months to adjust. Definitely made some more mistakes, learned from those mistakes. And now I'm feeling pretty comfortable with just consistent growth.
Yeah, I think, it's interesting. We talk about the year 2020 for the stock market, and we had the flash crash. What were we down 35% on the SPY? I think was the bottom. And then, yes, ever since then, it's generally just been up, but there were dips, along the way, some pretty significant dips and a lot of uncertainty just based off of the climate. So yes, in theory, you could have bought anything probably in March, April, May, and as long as you held on, you'd be fine. But even though it was a very good year for the stock market, in terms of like what you've done, I'm sure you still had to kind of battle through certain months and certain weeks where it's like you're kind of getting a taste of everything the stock market can throw at you over a lifetime in a short year span. Did you kind of see that?
Oh yeah. And I don't know any other environment, right? Like all my other holdings are just long-term and they sit there and they slowly gain value. So it was definitely a lot of trial by fire and learning the hard way, essentially, which made me adjust my strategy a little bit because of that. But yeah, emotionally, I mean, of course that's difficult. Like right when you're at a peak and it just seems like up, 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 but that's what it seemed like all year. It's like, this year or last year, like if anybody started picking stocks in March, everybody's a genius right now.
Yeah.
Because like you almost had to accidentally, like 1 out of 100 stocks that didn't go up. Yeah. And then when we're hitting like with Tesla pullback, these last couple of weeks, need to be able to handle that within the strategy for sure.
Yeah, so let's talk a little bit about the transition of strategies. So initially just kind of buying puts on anything and seeing what happened. Let's talk about, because you mentioned you're like, all right, I need to come up with a little bit more of a consistent way of doing this. So if you wouldn't mind talking about that mindset shift and maybe what you worked through to eventually get to the strategy or strategies that you're using mainly today.
Sure. So I just wanted, I guess, okay, so that first pullback when I saw that in my account, which was, I can't remember, like 70 to 50 or whatever, like I lost back 20 grand. And I wanted to find something that was like, I didn't need to grow the account 10x again. I just wanted, rather than putting myself in a position to lose 20,000, I'd rather be in a position to make, a couple 5%, 10% per month, and then just continually to grow that way. And out of all the things in there, I settled on put credit spreads on a stock that I love very much. And just because we went on those up, down, sideways, well, down a little bit, not down a lot necessarily. And that works out for me. I think the other ones maybe in a less volatile environment. Iron Condor is fantastic, but I think for me, there's too much volatility, and I hate putting the top on Tesla. That's just always a scary thing to do. So yeah, for me, it's just now it's consistency pretty much.
And that's mainly done just through seeing your videos with Tesla credit spreads, right?
Yep. Tesla put credit spreads. I know even after they have a pullback, it doesn't matter if it's 6 months, a year from now, I can roll those things out. And that's definitely the basis of my thesis. And of course I can be totally wrong, but I have so much faith in that company. And I think what the majority of people know about that company is pretty minor compared to where I think they're going to be. Like majority of people I talk to, unless they're like you, they don't even realize like Tesla does solar. They wouldn't know what they just wouldn't know about having batteries hanging on the outside of your house in case you have the power go out. Like that's not a thing for them. Or the future of like the robo-taxi network. So
yeah, I think this is probably the first year that I've seen some sentiment shifting in Tesla, right? Because everything before this year was, anyone outside of the people that like really did their research were completely bearish on it. But it seems like, at least, and maybe I'm just too involved in the space where I'm talking to people that do their research, but it seems like more and more people are kind of getting onto the side of understanding what this company could actually do, which is obviously helped the stock market price immensely.
Yeah, and just the fact that they keep saying like every earnings call, like the solar business is going to be bigger than the auto, so, like that's huge. and if anybody knows their business, it's them, right? It's not me and you. We can do all the research we want, but they know the inner workings, and to project that, and like all the analysts, everything's just based on the autos for the majority of them, anyways, except for maybe Kathy. she probably knows, right? And a handful of others. So, So once I did my research into it, though, it was just like, this is the spot. It has not only the growth. So I love to be like, I buy $200 worth of Tesla every single day.
Awesome.
Down sideways, doesn't matter. So I have a pretty good holding now as far as them, and the volatility too is such. I mean, that allows me to collect good premiums. I could do it on AT&T, but I'd make, I'd make my dollar for my $1,000 worth of collateral, which doesn't make much sense. So yeah, that's great and super safe. But man, to be able to collect like 20% premium, return on your collateral for a Tesla spread is just amazing, and something that my confidence is super high on. And yep, it may take, what are we at, like I don't remember where we closed, 770, 780, something like that. Yeah, even if it's 6 months down the road before it spikes back up above 900 and up to 1,000, that's fine. Can wait.
Absolutely.
I don't need to be rich next week. I want to be rich like in 5 years, 10 years. Like I'll be patient for my millions.
Absolutely. So when you're actually looking for these spreads, what kind of thought process do you go to when you're looking at the current price of Tesla, and maybe even considering some outside factors like our earnings coming up, or do any of those things kind of go through your thought process? And if you wouldn't mind talking about, are you doing weeklies, monthlies, kind of what are you looking for on these specifically?
So I like to open them generally 4 to 6 weeks out, and for a couple of reasons. One, I think statistically that's better, and that I believe that's something I gathered based on like the Tasty, one of their shows. Like just statistically, that's correct. And I was doing them earlier, but Battery Day, when it dropped after that, I kind of got bit by that by doing things too soon, and I didn't have enough extrinsic value in order to roll it out. Basically, it just like lost so much value that I ended up letting them expire. I shouldn't have. I should have just taken everything and pushed them out in hindsight. And then as far as selecting like strike prices, it really has to do more with news and just price action than anything else. I'm not looking at the Greeks. Ideally, I'd like to open them when it's dropping. Like, so if I see a good drop, especially on terrible news, like when it's news that I see that is incorrectly interpreted by somebody reporting on it, like that's beautiful. It's like the drop after Battery Day.
Yeah.
I'm still like, I don't know whether or not it's because a lot of people didn't understand the long-term expectations of it or implications of what they just announced, or everybody was expecting like, the 1,000,000-mile battery Cybertruck to be released, a few semis pulling up, like they expected all these the sandbagging that was going on.
Yeah, I was like,
I
I think people were expecting like a vertical takeoff, like Tesla that's airborne to show up, and just because that doesn't happen, they're like, this is BS,
right. And yeah, and by the way, we have a gig factory producing graphene anode batteries that's been hiding. So yeah, maybe that was part of it, but yeah, that's the reason I like to be 4 to 6 weeks out. I'll open them if I have extra capital and the stock has not recently gone down, so I don't feel like I'm getting great premium, or like it was a little bit overinflated. As soon as it was hitting 800, I'm like, I'm scared. I just knew that, not based on anything else, but I just felt like it was up there a little bit too much. So at that point, I will open some like extremely far out of the money to me. So like down in the 600s short term, just because I want my money sitting there doing something,
right? Instead
of just collecting dust, I suppose. So that's the only time I really go shorter term. And then those ones that are 4 to 6 weeks out, anytime I feel uncomfortable with them, I'm rolling them out, and I don't care if I have to, like if it's 6 months, it could be into next year. I'm just going to protect that collateral.
This will be an interesting question for you. I have a psychological block, I feel like, with rolling things out super far. And I don't know if there's like quick gratification mindset where you want to know that your money is coming in. And so when I do credit spreads, I typically do weeklies, maybe 2 weeks. And I've been in a position before where I think I was selling puts on Helion, and I've gotten away from that stock just because it's
Yeah.
POS. But I was selling puts on it, and because the premium was really good and it was kind of on its little run, and it tanked on me, and I kept rolling it out and I kept rolling it out, and it got to the point where I was like, I honestly am just tired of seeing this thing on my screen. I'm going to buy it back for a small or for a loss. And I actually looked back recently. I was like, if I kept rolling it out, I would have been fine. You know, I would have broken even like this past week or two. But it was like the psychological mindset of just like kicking the can down the road I couldn't deal with. So maybe if it was a stock like Tesla, I'd be a lot more like happy to do so because it's actually a company I believe in. But is there any mental block for you kind of when you're thinking through that stuff?
And because it's Tesla, it's a huge difference. If it was a company that I'd never been on their website, I don't own any of their product, and I couldn't explain to you what they do. Yeah. So, and just like you, I've done it before too, where I have something that's losing, even if it's like, I'll close out a losing position. I just don't want to see it anymore. Like it's lost all its value. I've already lost all my money, but I'm tired of seeing the negative $370 on my screen day in day. I'm just like, screw it. Once in a while, it probably could come back to life, but yeah, I just don't want to see it. And then once it's closed, like the day after, I never think about it again. So it is good to get it out of there mentally. But the kicking the can down the road, I don't think anything else I'd be comfortable doing it with. There's probably, like Amazon will probably be fine, and probably some of the other ones I'd be fine with, but like Elon, or if you had someone Nikola or
I'm not
Neo,
that crazy.
I'd be scared to do it on Neo. Like, so
it just feels like, obviously Tesla's had an amazing year, but it just feels like we're past the point where it's going to have we're going to see some drops, but it's past the point where we're going to be like diving back down to 500 or maybe even like the low 600 range, in my opinion, unless something just totally crazy happens in the business structure that none of us are aware of.
Yeah, that was like the worst fear is like when Elon's like, yeah, I think I have COVID. Like, no, you're like the factor that could change all of it. I think it would take more than Tesla, something happening. They have their hands into too many things right now. I think it would take like just an overall huge market correction for them to drop back down to anything like that.
Yeah, I agree. Let's talk a little bit about managing risk, because I think that's a hard thing to do, especially with credit spreads. It's not like you're buying day trading and you say, I'm going to sell if this thing drops 5%. You can do something similar with a credit spread, but how do you kind of think about that? And then maybe if you wouldn't mind talking about a few examples potentially where you've had to cut losses.
With Tesla, I haven't.
Always roll them out.
Yeah, I just keep rolling those guys out, and I mean it's worked out for me. No, sorry, I didn't do it once. That during like after battery day, and I think I just had so little value left, and I didn't manage it. I think most of the drop, if I remember correctly, like happened after hours, so it was like by the next day, and that's so that following Friday, I think is just where I lost on that, and but other than that one, I've simply rolled them out. And that's also why, like, I don't hold anything more than like maximum 5 days till expiration. That's
wow. Okay.
Yeah, or the least amount of days. So generally I'm rolling out with 5 to 12. And yeah, it doesn't maximize profit. I'm not squeezing every dollar out of there, but if we have like some of those overreactions, like January was it? I think it was January 30th where we had like a Thursday and a Friday where it dropped pretty good. Like if I had those things expiring that week, I wouldn't have much to work with there.
Yeah, that was going to be my next question, because if you're waiting until the day of, you're probably already too far of a hole, right?
Yeah, you are, and I've been burned by it, so I don't want to, and that's just learn the lesson the hard way, cost me money. So I'll just incorporate that into it. And I know the majority of people do what you do, and they'll go like a week or 2 weeks maximum. That's what I see majority of the time. But yeah, that's not comfortable for me. And then I truly do have to wake up in the morning and check like, what is the price? Like, did it drop $20, $40? Did that screw me? Do I have any chance for recovery? And I just don't have to think about it. And like some of them, when we had this last bit of drop, I had some 760s, and 760s or 765s, and they weren't expiring until March. But as soon as I see something that is uncomfortable for me, I rolled those out all the way until September, and I lowered the strike price, and I grabbed 3,000. It was like $3,600 worth of credit, and I opened some up that were sooner at like a 680 or something like that.
Right.
So, and then those ones that I chucked down the road, I don't really have to think about. I have a brand new $3,000 that I get to play with. So.
Yeah, that makes sense. Do you look at, do you have a profit goal on each of these where you're like, if it gets to this amount percentage profit, I'm going to close these things out, or is it just kind of dependent?
It definitely depends on the price action. So, I mean, if we have a breakout and it's up to $1,200, obviously I don't want to hold it as like some 700s. Generally, I'm looking for about 80% profit though. So I'll generally, like my $500 spreads, I'll look for anywhere between $1 to $1.20 credit, and I'll usually roll those out. And I barely close anything. I just roll them, and I'll roll them out to like when I get to 20 cents ish or so. $1,000, I'm looking down to about 40 cents.
Gotcha. And then I noticed, and I want everyone listening, if they're interested, obviously, to go over to Jason's channel. That'll be linked below, because he kind of goes through all his positions and shows you what he's doing. But it seems like you have multiple positions open at one time on various different stocks, right?
Okay.
Yeah. So I have a hard time, managing. I typically have like 3 credit spreads going a week is kind of how I roll. And I'm looking at your screen. I'm looking at your screen and I'm like, I don't even know how to keep up with all that. So how do you kind of manage that stuff? Is there anything you do outside of your brokerage to manage it, or is it all just up here?
It's just up here. I mean, each one of those just kind of says something to me. I have some poor man cover calls going on. I have like, I guess some wheel strategies going on. But everyone, yeah, they just kind of mean something to me.
Yeah.
And overall I can, and you'll see me, like, usually I'll record it just like at the beginning of the week. Hey, I'm going to take a look through everything real quick. Like I'll switch everything to equity, see how much equity I've left in a position, and anything below a certain threshold, I'm going to roll these out. But no, it's not, it doesn't become, or it becomes less and less difficult. In the beginning, I tried to do too much, and there were positions where I'm like, I don't remember buying this stock or the best one. It didn't happen to me, but it happened, excuse me, happened to my girlfriend. She's like, am I crazy? Because I don't remember. And it was like when a ticker had changed.
Oh, okay.
She didn't remember. Like she bought one. She's like, am I crazy? Because I don't remember buying work or whatever it was. I can't remember. But yeah, at this point, it's just yeah, it's all up here. It all means something to me. It's not like at this point I have to look at there and go like, what am I doing here? I know every single call that's short dated that I've sold it's either on a leaps or it's on stock that I own. I mean, yeah, selling puts is selling puts, and the rest are generally credit spreads, except for I have one kind of like YOLO debit spread on Tesla, and then I have one that's like I think it was a January, and I bought it like last year, and it was like an 800, like an 820, 840 or something like that.
Yeah.
So I still feel pretty good about that one.
Yeah, that's impressive. I have an Excel spreadsheet for just like the 3 I'm doing every week. So
that's probably way smarter though. And how long have you been trading them?
I started trading, like, selling calls, selling puts probably about a year ago. And then I had a hard time, either wanting to let go of shares of a stock I liked, and I had a hard time of buying something that I maybe like, yeah, I'd be okay holding it, but it wasn't really something I really wanted in my portfolio. And a lot of the stuff where it's like, if I sell a put on this and I have to collect 100 shares, I don't want to be over leveraged on that position versus other stuff. So I just found it to be like, yeah, if I had a massive portfolio where I have hundreds of shares of everything and I'm just trying to bring in a little bit extra profit, I could see the benefit. But I kind of shifted probably late fall into more of the put credit spreads, call credit spreads. And like you said, the market's been favorable for a lot of us, but I've seen a lot of good progress, and probably about 10% a month, just doing it on, SPY, QQQ, DIA. But now, especially after seeing your success, I'm like, maybe I should start dabbling. I have Tesla's my biggest position size for just holding long-term stuff. So I'm a big believer in the company as well. And I was just kind of dabbling around looking at the premiums after seeing your stuff. I'm like, man, this looks pretty enticing for how far, out of the probability of these things even hitting is so low. It could happen, and there probably will be a week it will happen. But as long as you manage your risk appropriately, hopefully you can avoid any major losses on that.
Yeah, get hit with the stupid tax, right?
yeah, exactly. And I'm like, that's going to be the first week I do it with Tesla.
I know. Yeah, definitely. Shoot me a DM when you open yours.
Yeah. Like there's going to be some ridiculous news that comes out, like, Elon Musk is going to go into a coma the week that I do this.
I know.
That's how I always feel.
I know. It's that's like the scariest thing is like Elon's health.
Yeah, I know. That's the one bummer about, and I think the company would be fine because I think they're so established, but
the rest of the world.
Yes, exactly. And just the general perception of it, right? The stock price I could see it getting cut in half if anything significant happened to Elon.
Yeah, I know. Yeah, me too. I mean, yeah, aside from that though, at least like their products are on the road. Their products are everywhere.
They're real.
Yeah. They're real. Like we drive them. So
absolutely. Yeah. I want to talk about kind of getting back to the journey you had, how you slowly increased position sizes or maybe numbers of positions, right? Because when you're working with $500, it's a lot different than working with $250,000. So did the strategy remain the same and just the contract size increase? Kind of how did you think about that as you were kind of learning how to trade now with a lot more money than you had before?
Yeah, basically it's just more positioned. I mean the first one that I opened, I remember it being kind of scary. Like, all right, putting $500 on the line, and I've repeated this too. I opened up a Tastyworks account with $600, and I opened that up in June, and I've done the same thing with that account. It's like 12,000 now or 13,000 from 600.
Which is awesome without having the March, April, May drop that we saw last year. So
yeah. But yeah, everything's just been increasing a bit, but I do take a percentage of that profit. I've withdrawn 50 grand out of my account. Like I said, I buy $200 worth of Tesla. So if things happen to go upside down, I want some fallback. I want equity. I want shares. My Tastyworks account has been 100% in put credit spreads. I've probably done 100 on there now, and I only touch it maybe once a week, maybe twice a week, and some weeks I just forget. But I do those so far out of the money that it's nothing that I have to really worry about. But yeah, it's just been increasing. But with that much money, like 250,000 is a lot more to worry about as far as losing. I can imagine that would suck compared to losing $5,000 or your $500 or something like that. Yeah.
So was there a time where, because $500 in the beginning, it gets up to about 70 and then drops back to 50 or something along those lines. When did it get to a point? Because I'm sure after the huge run up, you're kind of like, this is casino money, right? Like, it's a lot of money, but I only had 500 a few months ago. So at what point is it a shift from this is kind of just like money that I just made doing this to this is legitimate dollars that I need to be careful of and take a little bit more seriously? Or was it right away?
I think it was right. I think it was right away. with the fact that I could take money that I make off of Tesla and buy my Tesla cash. Like,
Is that what you did?
no, because interest rates are stupidly low. So I just bought more shares instead, honestly.
But in theory, that's kind of what you did.
Yeah, I did buy one though, in June.
That's awesome.
But it's like my interest rate on the car loan's 1.75%. So maybe if I'm really good, I can get a return of 1.75% of the money that I don't spend on it.
If you're really good and you put it in a bond or something, that's
yeah, right. Yeah, that'd be the smart thing to do. But unfortunately, it's like Robinhood. And I've talked about it a couple times, but it really is gamification. I know they've been accused of that, and it totally is. Like the difference between even having money in Robinhood and in your checking account, like you transfer it out, that it's so much different even in your checking account, and then you take that same money, put 50 grand in front of me. Like it's a different mentality. So I don't know if that's good or bad. Like on the down days, it's almost good, because it's not as emotionally draining when you see a little bit like, oh, it's just this line that's kind of going up and it's doing that. But it also kind of messes with you sometimes, where I'll spend $1,000 on some YOLO stupid stuff, because that kind of keeps it entertaining for me. So I do take a small percentage of my account and kind of do whatever, but my trade sizes are they're small. Like there'll be $40 or $50 or something like that on some of these plays. But real money, would I do that? Like, would I take $200 or $500 and put it on the roulette table? No. Like, it's definitely quite different. So, but the money that I've withdrawn is definitely real.
Yeah,
that helps it out.
Yeah, absolutely. So, with kind of the goals that you're setting going forward with the account, let's put it, is there anything you have, and it's tough working, with investing stuff because we don't have total control over what's happening, but do you set goals for yourself where, by this time I want this amount in the account, or by this time I want this amount to just kind of live passively off of? Is that something you think about?
Yeah, I think like long term. So like 5 years, 4 or 5 years, I just want to have house paid for in about 2.5 million is what I'd love to have. A good portion of that in just dividend paying stocks.
Yeah.
And I don't have exact ratios or anything. I just know, like, I know my Tesla I'm buying today is going to be a lot more valuable in 5 years. I don't know what that number is. But I am planning on doing, as soon as I can get my account open in TD Ameritrade, and that'll be through an LLC, so I'm not paying so much taxes on this. I'm going to start over my Robinhood account essentially, and just do like start with 1,000 or 10,000 or something like that. And at that time, I want to take the time to like clearly write out goals. Like, this is the percentage of profit that I'm looking for. This is what I'm, this is what I project out a year, and then set the goal based on that. Because right now I don't have anything written out, and it's just the market's kind of going to dictate my returns. I think I'm playing on the right side, the correct side of things, playing the casino, not the gambler. But I don't have a mark to shoot for. I mean, 6 months ago it was, oh, can I get 6 figures in this account? And then I think even since I posted it, and it's only been maybe a month and a half, I think 2 months maximum, like I've gained another 100,000 or something in the account. Yeah.
So definitely seeing that compounding happening relatively quickly as you're using more and more capital.
Yeah, it definitely compounds, and I'm pulling money out. That's a nutty thing. It's like, it's compounding. I'm pulling money out, sticking in my bank account. I'm buying shares, and it's still growing pretty well.
Yeah, that's awesome. What about do you have any plans? I know I've seen you on other channels. I know you have your own channel, but do you have any plans to kind of build this out and maybe share this story in maybe of a more kind of structured way, if that makes sense? Or I don't even know if you're interested in like the courses kind of stuff, but have you kind of thought about that stuff in any way?
I'm starting to think about it more. And yeah, for a while it was like my my YouTube consisted of, hey, this is what I'm doing today, and I'll post that, and okay, I made money today, lost money today, this is what I'm doing. But as it's growing more, I realize like I can't respond to everybody, and being really small, that was awesome. Like 4 or 5 people, you know, a couple of questions a day. I could handle that. I could answer them. I could answer their exact question in the next video. But as it becomes bigger and bigger, that's something I need to have a conversation with myself about.
Yeah, honestly. If that's something you want. Yeah.
Yeah, because then you get people like, I opened this thing, I don't have any idea what I'm doing. Yeah. You're like, help me, and you want to be able to help them. You're like, okay, dude, you need to preserve your dollars. Anything from that to guys who like literally, yeah, I've been working 50 years as a career. I want some extra income. Like, what do I do? And do we give somebody like a little direction or something on that? And I don't know what I can do legally.
Right.
You know, everything is not financial advice, et cetera, et cetera. So I don't know what the limitations are there. I do have a friend that ran a hedge fund, and I want to actually talk to him about that specifically. Like, hey, what can I say? What can I not say? But at the same time, I super enjoy helping people. That's at the end, when everything is paid for, I have an income. That's all I want to do. I want to travel third world countries and help people out from my hands to theirs, not just giving to organizations or something where you don't see what the money's doing.
Yeah, that's a good point. And I don't really share, you know, typically I'm interviewing people on my channel, so kind of helping them share their stories. So I have not really had to see this, but I can see how you're kind of getting in this dangerous game when you're, you know, especially the people that blatantly are like, hey, this is the trade I'm doing each day. Because if it goes south on you, and you don't know everybody out there that's listening to your story, and we always say it's not financial advice, but you know, the one guy could jump in and do the one like horrible trade that I had over 2 years time, you know, and then his life savings is a mess. And yeah, it's a dangerous game. And I totally understand why there'd be some hesitation. They're like, is this something I really want to get into? But at the same time, it does give you the opportunity to help a ton of people. So it's kind of like that little tightrope where you're trying to figure out the balance on that.
Yeah, it's tough. I mean, like you get people DMing you, and like they'll literally like, here's my trade, like what do I do now? Or this is what I'm thinking about, what should I do? And some of them are just like, that's a bad trade. Like that's just terrible. Or if you don't know what you're doing, you just need to hit the close button, give Robinhood whatever money they want, and deal with something you know how to deal with.
Yeah.
So yeah, I don't know. I mean, all the fundamentals are there, and there's the whole course thing is difficult because all the information is available for free. I don't think I'd learn a pinch more than I would have, like if I would have bought courses. And I think the most valuable things are just books that I've read, like as far as mentality, not necessarily like any of the technical side. And I think a lot of the stuff is going to become outdated pretty quickly too. Just this is a totally different time with this army of retail investors. There's things that are going to happen that we've never seen before, and we're only going to learn from that. Like we're going to learn about it on the front end. We're not going to learn about that on a year-old course or book or anything like that.
Yeah, the environment is rapidly changing, and that's why it's funny. Like you read some of the older books, you know, that a lot of it's value investing and, you know, PE ratios and all that stuff is still important and it has its place. But something I've talked about a lot of times on this podcast is, yes, you will have some returns if you follow everything like book value, but you'd also miss out on some huge gains if you're looking for like the perfect investment every time. So,
oh boy, yeah, I have some other stuff I do. I have like one portfolio I built out of like just all value investing, and another one that is just all growth companies. And I'm sure you know how those are doing.
Yep. Yeah. I mean, what's Tesla's PE ratio, which just barely even became a PE ratio, is like 1,000.
1,001. Right? Yeah. Right.
But both of us and many other people out there have full confidence in the company. So it's like what I talked about with Ryan on the last episode. I think Tesla will exponentially catch up to that PE ratio versus, other companies, just because they're doing so much that once their foundation is built and it's built out, it's going to be, very short amount of time before they're right where they need to be in terms of valuation.
Oh yeah, when they turn on the robotaxis and they're gaining 20% of that revenue like overnight.
Yep.
That, and they could recognize all the revenue from the FSD that they've taken, and yeah, that's gonna be huge.
Yeah.
But also, people have to realize Elon's goal is to not go bankrupt, not make X amount of dollars like at all, like change the world and not go bankrupt while doing so, and that's it.
Yep,
So,
pretty much.
yeah.
I think my favorite quote from Elon is that his goal is to die on Mars and not by impact. It was like,
I love it.
Yeah, it's pretty good. Well, I want to jump back real quick on like the last little bit of this. You talked about the goal being go over to third world countries, like physically help people, right? Not just submit money to a bank account. And one of the videos that you posted that I really thought was really cool to see was when you kind of talked about perspective, right? And I think you talked about you and your girlfriend's trip. Was it to China, if I remember right?
That was Vietnam.
Either way, getting caught up in the numbers, and it's something that we love, investing, trading, but it's very important to take a step back and realize like, hey, we are, maybe you lost a trade, but the fact that you're upset on the fact that you lost a trade using a computer with internet access and the comfort of your own home with a full belly, and it could go on and on. So if you wouldn't mind just kind of talking about how you deal with that stuff and your kind of perspective there, and maybe a kind of a recap of that video, just so people here can kind of hear that.
Yeah. So taking a step back, and it's hard to do when you do have those bad days. So I'm just super thankful and grateful that I got the opportunity to do that. But yeah, for me, it's a step back. Hey, zoom out on your account. Feel blessed that you have this money to play with. Like, the fact you lost $5,000, we're fortunate to have $5,000 extra to be able to play with, to be able to do this, and it's so huge. As far as that video, just if you've never been to a third world country, I think it's one of the best things that you can do for yourself and put yourself in a really good mindset. Like, there's always been those things like growing up where, hey, for just a cup of coffee a day, you too can support a child. And growing up in the US, you're like, yeah, no, you can't. Like, there's no possible way. And then you go to another country where somebody like working full-time construction jobs making 25 US a week, and you see how cheap things are. And yeah, it can be done. You see countries with no fallout. Like, if you are ill and you don't have family to take care of you, you're screwed. You're on the street and you're literally begging or collecting cans because that's all you can do and that's your only choice. There's nothing in place. Like, we can jump on the internet, get educated. We have so many educational opportunities. Our education transfers to other places, and it's just not the case with a lot of them. And to see people who are just 100%, it's friends, family, eating together, and that's it. It doesn't matter what logo you have on your shirt, what kind of shoes you're wearing, what kind of bag you're carrying, what kind of car you drive. Like, none of that matters. And I tell you what, like, on average, way happier than most of us are. And then you can go there and you barely need a budget. Like, you and I could go and we can stay in the nicest place with security. We can go out and eat and drink and have fun all day and pay for a hotel, pay for a driver, go to the equivalent of probably Disneyland, less than it would cost for you and me to go like have a drink here. Like, literally, it's insane. And for me, I totally enjoy the just the difference, like, culturally for us. But seeing that and putting it in perspective, you will come back and feel stupid about like everything you paid to have a name brand stamped on it. You're like, this is worthless in my life. It doesn't make me happy. And when you do have the opportunity to be able to give, it's huge. It feels, I mean, I know it's good for everybody else, but even for your own self, it feels like absolutely amazing. My girlfriend's like totally inspirational to me. She's definitely a hero to me. She will give her last dollar when somebody needs it. And I don't mean like her extra spare money. Like I am not sure if I'm going to be able to pay my lease on my place today, but someone really needs that money, like the stuff that I wouldn't be able to do, most people wouldn't be able to do.
Me too.
Yeah, like I'm not that good. So, and you know, everything always just comes to her though. So, you know, she's never been a day without food or anything. She just, that's her heart, and it's almost childlike, and it's wonderful. So
yeah, that's awesome.
Yeah, and so to lose 20 grand in a day or see the account go down 20 grand when you have all the other stuff going on, I mean, it's nothing. Did I really need that $20,000? No, I have a house, I have a car, like you said, I have a full belly, do anything we want. Yeah.
That's awesome. Yeah, I really enjoyed that video, and like I said, everybody go over and check out Jason's channel. Really enjoyed having you on today. We'll have to do it again, maybe in 6 months or something, check up on the portfolio and give a little bit of an update. But is there anything kind of last minute thoughts or things that you wanted to add before we wrap it up here?
I don't think so. I think I had thought of something earlier, but no, not much. I think we've gone kind of over basics of everything, and yeah, this has been pretty awesome. Thanks for reaching out to me.
Yeah, absolutely. The one question I've been trying to ask everybody I have on here is if you could have 24/7 access to one mentor, dead or alive, who would you pick?
Ooh.
Business mentor, life mentor, whatever.
A lot Gary V. Just because he's so forward thinking and so like super on top of it. Elon would be an easy choice, but I think he like put so much out there, and I feel like it would be over my head what he's telling me. My girlfriend actually told me, she said, I hope the next life you come back is like half as smart as Elon. I was like, yeah, me too. That'd be a good step up. Oh yeah. I think Gary Vee, I think it'd be super interesting. And imagine having that like constant motivation.
Yeah.
Like
yeah,
all the time, like, oh, I'm feeling a little sad. Let me call. Dude, do this, do this, do this. Jump on it. Yeah. I think it'd be him. Who's yours?
I don't know. That's kind of the reason I've been asking a lot of people. I think I would really enjoy being able to talk to Elon, you know, whenever I wanted, just because he seems like this perfect balance. He's not, I don't think he's super like investment, you know, probably even not so much business minded. He even says it himself. He's like, I'm an engineer, you know, I'm not an investor. But, you know, there's no other CEO, or in his case, the richest man in the world, that still has like the ability that I've seen to have fun and, you know, joke around. And he's all over Twitter with memes. And I don't know if you've seen his Joe Rogan interviews, but like, he's just like, he still does things for the fun of it. I know like one of their rockets, he was like, let's make it pointier. And they were like, why? And he was like, because it looks cool. It's like that.
Yeah.
Like he was doing the Cybertruck drive with Jay Leno, and Jay Leno's like, why would you make, you know, bulletproof glass? And Elon's response was, because it's badass and super cool. And it's just like what other CEO talks like that, you know? So I feel like I could have a normal conversation like this, and then we could talk about, you know, going to Mars or Tesla or whatever, and you kind of get both sides of it. So I don't know if that's my answer, but I think that's what I'm going with right now.
I think the most I could gain from him is probably time management. Like how, like, I know that baffles like everybody. I think like Joe Rogan both times, like, how do you juggle all this? That's cool. That man does so much, and I can barely like return DMs.
Yeah, there's times where I'm like sitting there watching Netflix or something, and I'm like, I'm so lazy, you know, compared to but then the thing is, he still finds time to be plugged in, you know, like he plays video games. I'm sure it's not a lot, but he still finds time to be kind of plugged into what's going on. So you're right. I don't know how he does it.
I don't know either. That Netflix thing, the last time I watched Netflix was actually about a month ago now. I was watching. I think it was called The Island. Is the one like all these girls get like dropped on an island in the middle of nowhere. And I could be totally wrong about the name of it. And then there was a guy, one of the parents of one of the girls. He was like basically like on hospice in his house, and he's like sitting there all day like watching TV. And I was like, man, I can be watching Netflix like when I'm practically dying. Like, why like literally am I spending my time now? That guy, like when you're on your deathbed, you wish you would have gone and done anything else.
Yeah.
And I recently just read a book, and it was definitely not business orientated. It was about like a former drug addict, and her perspective when she was in jail, in prison, and it's like all she wants is to like get outside. And I'm just thinking like, why am I spending any time doing this stuff that doesn't create any great memory for me, or it doesn't even educate me? Yeah.
Have you been doing anything differently just to kind of like take advantage of those moments?
I've been putting more time into reading. And then obviously all of a sudden after interviewing with Logan, that's kept me a lot busier. So now I kind of need to implement things to take care of that. So everything is kind of taking its place really quickly. But that's something that's probably one of my major goals, is kind of get all that situated and spend as little time on that as possible. Cause I just know that's, I'd rather think about the mountain I climbed. Like that was a gorgeous, I remember that, but I couldn't tell you about the Netflix that I binge watched for 40 hours because COVID. Just, it's silly. It does nothing for me mentally, does nothing for me educationally, does nothing for me like health wise. That was an aha moment.
Yeah, absolutely.
Like a month ago.
Yeah, there's a time and a place, right? It's not like never do it, but certainly there are better uses of time. That's for sure.
Yeah, I'm kind of getting pretty close to the never do it. Maybe a movie once in a while, but those series, like, just those, I don't know. I do play one of your video game too. That should be my only outlet. I don't need both.
Yeah, I think that's smart. Well, Jason, thanks again, man. Let's go ahead and plug your channel, whatever else, where people can find you in case they want to kind of catch up and follow you along.
Yeah, so Theta Profit, you can find me on YouTube. We have a Discord. It's just still being set up pretty much. I had so many requests for it and getting some help with that. So eventually that'll take some form. And on Instagram as well. Theta Profit there too.
Cool. It'll all be linked below. And thanks again. Have a great day.
Yeah, you too.